Hey, good morning, everybody. Today is Thursday, January 21st, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership is in the market. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 15 came from the semiconductor devices industry group, 6 came from managed care, 6 came from healthcare services, 5 came from biotech, and rounding out the top 5, we have semiconductors, specialty pharma, healthcare supplies, and specialty apparel, all with 4 stocks each in the 100 most powerful stocks in the most powerful industry groups. These may be good places to begin looking for leadership when the market confirms the next uptrend. I want to start today, as we generally do, with the Russell 2000. Russell yesterday sold off sharply into midday and then made an abrupt about face and actually closed higher for the day. Notice how we didn't make a higher high, and so I take that higher close with a little bit of a grain of salt. But it was interesting that the Russell showed so much strength yesterday. As you know, the Russell is the key to the market going forward here, and perhaps a bullish close by the Russell yesterday may be an indication that we've about put in the bottom here. First indication that we've put in a bottom would be when we take out resistance down here in the 1040 area. Ultimately, we need to break above this downtrend line. So we've got a lot of work to do before the Russell turns bullish and gives us an opportunity to maybe get a little bit more bullish with the market. Let's take a look at what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market. And to my way of thinking, that's the most important element. So let's take a look at the market. Markets gave us a wild ride yesterday, closing mixed on huge volume. The Russell 2000, after having been down over 3.7% for the day, closed up by nearly half a percentage point. The small cap S&P 600 also closed higher for the session. Both the S&P 500 and the NASDAQ closed lower for the day, but sharply off their intraday lows. Our overbought oversold indicator is showing an extremely oversold condition in the market. Keep in mind that an extremely oversold market can become severely oversold. According to our market timing model, we remain on a primary sell signal with a secondary aggressive buy signal. An aggressive buy signal indicates that aggressive traders can buy stocks but should not be employing margin at this point. More conservative traders should continue to accumulate cash. The S&P Composite is an aggregate of the S&P 500, the small cap S&P 600, and the mid cap S&P 400 indices. An aggressive buy signal is triggered when the total number of stocks in the S&P Composite trading above their 9-day moving average is greater than the number trading above their 50-day moving averages. This is a much lower hurdle in an extremely oversold market. We aren't seeing any universal watch list stocks that are even approaching legitimate buy points. So I would take the aggressive buy signal with a fairly large grain of salt at this point. That noted, declining issues outpaced advancers by better than 5-2 yesterday, and the New York Stock Exchange advanced decline line continues to look more bearish. New lows crushed new highs with over 2,000 new lows yesterday and a total of 6 new highs. For the first time since December 22nd of last year, small capitalization stocks bettered large cap yesterday, but large caps continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Okay. Yesterday, the NASDAQ Composite was down 5.26 points, or 0.12%. We closed near the high for the day after having traded off fairly significantly during the course of the day, very significantly during the course of the day. Notice how we held support down here in the 42.92 area, and we actually balked at resistance up here in the 45.06 range. Trading volume yesterday was heavier than the prior day and well above average. For you followers of William O'Neill, the market is in a correction. We've been in a correction since January 5th. Right now, the NASDAQ is bracketed by support down here in the 42.92 area and resistance up here in the 45.06 range. Our market timing model is indicating a primary sell signal on the market, but we do have an aggressive buy signal. I wouldn't be inclined to buy at this point. Be careful. See what the S&P 500's up to. S&P yesterday was down 22 points, or 1.17%. We closed at 1859, which is significant because we have undercut support down here in the 1867 area. The S&P closed well off its lows for the day, but this undercutting of support is a significant concern. Trading volume yesterday was higher than the prior day, giving us a distribution day. S&P is in a market in correction. We have been since January 4th. Right now, we want to see if the S&P can recapture this support level down here in the 1862 range. Our market timing model is on a primary sell signal, but we are also on an aggressive buy signal. As noted earlier, the market's extremely oversold. In an extremely oversold market, an aggressive buy signal is a much lower hurdle to overcome. We're not seeing any of the stocks in our universal watch list setting up at this point, and so I would take the aggressive buy signal with a fairly large grain of salt here. That noted, an aggressive buy signal indicates that aggressive traders can buy stocks, but should not be employing margin. More conservative traders should continue to accumulate cash. Be careful in this market. This isn't the type of a market where we want to be buying aggressive positions. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.